Good morning, everybody. Good morning, everybody. I see lots of you in the room. Welcome to the morning show in the live market open for Friday. Happy Friday. It's April 22nd. I'm Yohay Elam, Forex Expansion Market Movers podcast. As usual, doing the show for FX Street. Good morning, Sinatra, Andy, Luca, Fabian, Ed, Jake, Hans, and everybody else who's watching and keeping quiet. Questions, of course, are welcome. As usual, we'll cover recent developments in markets. We have had surprising development this morning. Anyway, covered charts and levels. The next, less than 24 hours, because it's already Friday and markets close. And of course, a preview for next week, something we do every Friday morning. Your questions are welcome. If you cannot see the chat alongside the screen, here's the address, tlk.io/fxstreet-forex-live-video. So, yesterday we did have a Draghi drama, okay? Post-Draghi London Opens, this will be a hoot. Yeah, so it was a drama around the event, but we're basically back to the same place, okay? So, around 113, let's begin with this, with the chart, okay? This is not the chart, this is the big event of this morning. Well, now we're even falling. So undoubtedly we had a drama, right? You can see long hours of shallow moves and then this boom. So we had euro dollar weakening on Wednesday evening, falling below 113.35, and then when Draghi began talking, it shot all the way, almost touched 114, and then fell back to the previous range. And now it's even sliding to the downside. The US dollar is strengthening this morning. So if we begin from the last events, we're seeing the US dollar strengthening. Draghi, bottom line, he didn't say anything new. Let's cover what he did say. But the main points are we didn't do any change, of course, in policy. That was expected. We need more time, patience for things to work out, including the TLTROs, which are expected in June. He did pat himself on the back, saying that, look, we've succeeded with all our measures in stabilizing financial conditions, the fear of euro breakup, everything. And also lending conditions are improving in the eurozone. If it's M3 money supply at 5% and private loans, so things are improving. And he repeated once again that they're the only game in town. He used other words, the only stimulus package in the past 4 years. What he did say about doing more, the door is open if needed, but he didn't elaborate on that. He did say that rates will remain low well beyond the end of QE. And QE, well, currently QE is intended to end in March 2017. That's not new. And and of course, we talked yesterday about helicopter money, the concept of just putting money in citizens' pockets in order for them to buy. A very wild, a very inflation fearing concept. And when he was asked about that, again, it wasn't in the statement. He said, yeah, it's an interesting academic concept. We had absolutely no discussion about that. So that was also one of the things that sparked the move. Again, we can look back at the charts, at the euro dollar chart. We can see that all in all, we went back to the same place. We had the rise beginning before Draghi, spiking to the upside, back to the downside. Okay. I see commodity currencies getting crushed. Dollar yen up 1% after better than expected Japanese tertiary industry index month over month. Dollar yen is moving up because of a totally different reason. Okay. So let's look at the levels first. 110.50. It's at the highest levels, well, since not that long ago, since April, but since before this tumble down all the way to 107.65, we had it struggle with 109, eventually move above, fall back below 109, hardly climb back, hardly making a move towards 110, staying shy. Now, boom, we're on the upside. But that's not the reason. Not the data. Unfortunately, Japanese data doesn't move markets too much. What moves the data is a report by Bloomberg saying that they could apply negative rates to loans to banks, which means they will be paying banks to to lend out money. It's a bit similar to the ECB's TLTROs. I mean, it's as far as I've heard. Again, these are reports. It's not confirmed. It's not a policy. The report on Bloomberg, quoted now by everybody, says that in their next meeting, which is on Thursday, April 27th, they will announce this. This is, of course, more money for the banks, good for Japanese stocks. What's good for Japanese stocks is bad for the Japanese yen, good for dollar yen. And of course, that's what's pushing the yen lower. Yeah. Bank of Japan did negative rates. Now sub-zero loans seem like they're trying anything to avoid more QE. Another misfire. Why would sub-zero loans to banks weaken the yen? Well, a few reasons. First of all, banks will get more money. It's another form of printing money. More money, weaker yen. Another thing, it raises the bank's profits. And as I said, there's a good correlation between banks and, stocks going up and dollar yen going up, especially the Nikkei. And well, in general, just more stimulus. I would not fully rule out more QE. They could certainly do more QE. Just try to report that, in terms of bond yields, if you want to lend money to the Japanese government for 40 years, a very long period of time, you will get a yield of 0.3, okay? That's it. For 10 years, you'll have to pay the Japanese government. I don't know where exactly it's the zero line, but getting money out of so much debt is owned, Japanese debt is owned by the Bank of Japan, and yields are so depressed, bonds are so expensive that, QE is probably has its limits, okay, but you never know. Of course, we might have more stimulus by the government, well, specifically perhaps to, tackle the damages of the earthquake. Another question here, I'm short from 110.55 stop loss, 111.25. No, it's not a rumor. I would call it a report. I mean, it's not confirmed, but Bloomberg usually doesn't mess up with these kind of things. So let's share the chart here. That was shared by Luca with everybody. So I would call it, a serious report. I don't think it's not a rumor at this point, okay? I mean, it doesn't mean the Bank of Japan will not do it. It will do it. I mean, they could do whatever they want next week, but they're at least considering it seriously. I trust Bloomberg on that. So yeah, here we are anyway. Thanks for the chart, Luca. Yeah, we could have it fall from these kind of levels because that's, that was a support. Yeah, so let's see. And Sinatra says, at least the jump started with the Japanese data this morning. I was there live. Okay, so yeah, I didn't really time the jump with either the data or the report by Bloomberg, because but anyway, it's I attribute it to the report. Okay. Anyway, because that's a more serious thing. I mean, yeah, data is not move the yen. Even more important data than this one. All right, so thanks for the chart. So that's a big event for this morning. Well, so far this short by Luca is working because we're down 110.48. So you're already in the black. Anyway, levels to watch 111, 112. 112 and then 112.80. On the downside, 109 and 107.65. Okay. Before we move to more charts, we talked about the main currencies. Oil is a bit lower. Some profit-taking commodity currencies, as you mentioned before, Jake, are getting crushed a bit. But oil didn't fall that much, okay? OPEC is still talking with one another. Iran is also offering to participate. So things are still busy. And there have been reports that, okay, we've reached the bottom in oil. So anyway, it's a bit of a mixed picture. Let's take a look at oil, because that's the driver of Canadian dollar, but not only that one. Sorry. So oil is off the highs. Okay, we reached a high of 44.50 more or less, and we fell to 43. Now we're bouncing back up 43.65. So actually for this morning, we're still on high ground. Remember, it's about 60% above the lows seen in the middle of February. A huge shift in sentiment. We were commenting on this yesterday, Dale, Valeria, and I. So yeah, commodity currencies are lower, oil is lower, but nothing is going. Oh, okay. Maybe I should change what I said because this is already a bit more a significant move. In dollar CAD already dipped its feet under 125. Yesterday we had it. Yeah, with this sort of stronger dollar and weaker oil, we had it challenge 127.50. Look how it worked here as support, and now as resistance. Very strong line, strengthening now its importance. 128.30 is resistance. 129.30 to the downside. We have 126.30 despite the fall below this level. Okay, so yeah, I think commodity currencies suffered a bit more yesterday when oil was falling a bit more. Now, yeah, I mean, we have a lower Canadian dollar, but not crazy. I'm still long dollar CAD, short oil, short silver. Okay. Yeah, long dollar CAD and short oil certainly go together. Silver, yeah, we talked about that yesterday. Silver prices had this shoot up to the upside, a bit wild. Let's continue with other currencies. Aussie dollar, well, now sliding under this line of 77.40 that I mentioned, so it's also suffering. Again, a lot of the suffering came yesterday. Falling for, I mean, at some point around when Draghi was talking, it reached a bit higher, almost got close to this 78.40, which was a strong line, and now it's falling to the downside. Maybe we should adjust the lines just a bit right here. Yeah, 77.40, more or less the same. Anyway, further support at 76.40, and then 75, resistance 78.40. Yeah, comments here. Dollar CAD still dealing with H4 divergence, stochastics temporarily overbought though. Okay, let's share that as well with everybody. Okay, we're seeing the clouds gathering here. Thanks Sinatra. Divergence. Well, it looks like a downtrend, no? But yeah, it's already 2,000 pips below the highs seen in January. Yeah, I'm still a bit bearish on oil, but let's see, it's relatively strong. Another comment here, Fabian. Draghi didn't give any new reason for weakening euro, as was expected. So euro went up, yeah, as expected. Why after the press conference euro started to fall? I think also was profit taking and a stronger dollar across the board. But basically, we're in the same range. I mean, I can't find anything that Draghi said that would weaken the euro. He left the door open, yeah, but he ruled out, at least for now, helicopter money, which is sort of the nuclear option. So, sorry. Yeah, I mean, I can't attribute the fall in euro dollar to that we're seeing now to anything that Draghi said or didn't say. Okay. Anyway, we talked about dollar CAD. You asked for a bit more Hans about the Canadian dollar. I think just covered it beforehand, so maybe if you have another specific question, we'll get back to it. Draghi left hands, yeah, dollar strong across the board. More dollar strength than your weakness. I agree, Luca. For me, the key line was keep rates at current or lower levels if necessary. Yeah, but that's a line that they had since June 2014, if I'm not mistaken. So it wasn't news. For me, the small change was he said that they will remain at current or lower levels after QE ends. Okay, so I think that was a small change, but not that surprising. I mean, we know, well, if QE indeed ends in March 2017, and we'll have low rates for a long period afterwards, which I think is something the market already had in mind. Yes, but yeah, it always does. Yeah, US yields are picking up. Market may starting pricing major possibility of hike in June. So dollar index major support level into the ECB. Regarding that hike in June, we did see a shift in expectations. I did talk about it yesterday with Dale, but it was from 87% against the rate hike to just under 80. Still low expectations for a rate hike in June. We heard from a few Fed hawks and doves as well, saying that more rates will come and come soon. Okay, but we did hear that so many times in recent weeks, and then only to hear Yellen and also Dudley sort of go for the dovish side. Recent US data hasn't been that positive. Next week, of course, we have the Fed decision. We'll talk about that in the preview for next week's events. These are the chances. Yeah, the dollar suffered a lot, and now we have repositioning of the stronger dollar, but not. I wouldn't attribute it. Again, I mean, I don't think the Fed will tell us in April. That means next week on April 27th that it's about to raise rates in June. If that would happen, that would be a huge boost for the US dollar. I don't think it's priced in because there's a reason not to price it in. Anyway, comment here, pound dollar falling sharply. Yeah, yesterday it had a more dramatic move, more or less moved with the euro. Okay. Anyway, dollar pound 144.40 was sort of a resistance and support. Anyway, currently at 142.30. This line is not that strong here in the middle as it used to be, 143.50. Anyway, the pound had yesterday terrible data. Retail sales fell a lot. I'll show that soon. Yeah, they won't raise rates before the Brexit. External factors, Yellen said. Yeah, and we have U.S. President Barack Obama is visiting the UK, and he campaigned against the Brexit. Okay, he wrote an opinion, piece in the Telegraph, which is a sort of conservative, widely circulated newspaper in the UK, urging Brits that it's better to stay in the EU, talking about Second World War and NATO and things like that. I don't know. I mean, Cameron is doing whatever he can, using whoever can help him, and Obama is relatively popular in the UK to help him. Yeah, Frankfurt expecting losses because of ongoing US investigations into Daimler. Yeah, and also now Volkswagen has a board meeting, an important one, about all those emission scandals. We know that also Mitsubishi in Japan has problems with some kind of cheating. Yeah, I hope somebody gets really punished for all this, and not only these companies getting fined. I think also Samsung is cheating on the some kind of radiation coming out from televisions. Anyway, I hope it's not only a small slap, a small fine. Weak earnings, failure at major top in stocks. I'm thinking risk off, profit taking equities, weak commodity. Yeah, we're seeing some kind of yeah, not so positive mood. But this thing with Japan this morning, that's certainly a positive mood. Bank of Japan certainly changed the atmosphere, at least for the yen. Yeah, profit taking is certainly a reason because we're close to the weekend. They're all poisoning us, making the products look really nice. Yeah, lots of cheating. And when the USA goes to war, invasions always ask UK to commit to putting aside some oil barrels just in case. Yeah, that's a special relationship also in oil. Anyway, let's continue. Let's talk about the Kiwi now. Kiwi also with other commodity currencies falling off the highs, just under 69. 68.80 is some kind of support. 68.20 is stronger support. Resistance remains here at 69.50, followed by, well, let's take this level 70.50. Okay, dollar Swiss currently 97.57, moving up. The US dollar is moving up, and also Euro Swiss is moving up. Maybe there was some action by the Swiss National Bank, maybe not, but anyway, we're seeing we found here support at 96.40 in the Draghi drama yesterday, so this line still worked very nicely as support. Then we moved back above the end of the range here, and now we're at in the middle of the range. 98 is further resistance on dollar Swiss. Euro Swiss is up above 110, continuing its gradual rise to the upside. In the middle of April, we were under 109. Now we're just above 110. 110.30 is some kind of resistance. Sorry about that. Anyway, this pair hardly moves. Euro pound, well, after falling from this clear separator of ranges, 79.30, continued the grind lower, mostly on euro weakness. The pound is a real Teflon at the moment. One of the reasons I think is that the mood is shifting once again, that a Brexit will not happen, and but yeah, the pound has been fending off really bad data this week. Jobs, retail sales. Anyway, further support at 78.30, 79.30, 80.20, and 81.20 are levels to watch. Euro yen, we can also see here the weakness of the yen on this BOJ report that you'll be paying banks. So 125 works very nicely as resistance right here. 123 still some kind of support. Okay. Pound yen continues its march forward. 158.50 has been broken just now. Let's see if it's a real or false break. 160 and 162.50 are the next levels to watch. 156.60 is support. Okay, so we covered all our regular charts. If you want to ask questions about any of these charts or other charts, just shoot the questions. Oil continues its recovery as we speak to almost 44, and euro dollar remains depressed a bit. Okay, so we talked about Draghi, about the Bank of Japan, about oil. Yesterday we also had some data. As I said, big disappointment in the UK. Retail sales fell 1.3% month over month. Only a small slide of 0.1 was expected. This came on top of negative revisions for February. And also core retail sales missed, and also there we had a downwards revision. I mean, you just had to look at the figures when they were released. It was all red. Okay, it hurt the pound, and once again the move lower in the pound began before the release, quite common over there. And then we had a recovery. U.S. jobless claims. It was very much overshadowed by Draghi because it was released at the same time as he began speaking. But they're amazingly low. They fell once again below expectations, 247,000. Okay, I think we haven't seen these levels in over a decade. So this is good for the U.S., but all the other figures are not good. Philly Fed index was expected to remain on high ground, but turned into negative territory, indicating contraction, ongoing recession, perhaps in the manufacturing sector in the United States. And Eurozone consumer confidence remained at -9 as expected, reflecting pessimism. Okay. More questions here. Did you know that about 70% of Venezuela crude can only be refined in the USA? As there is no other refinery that can process it. I think the refinery was built specifically for, Venezuela, the economy isn't run there in a very smart manner. Refineries would certainly help them, and better management, taking care of crime, is also an issue. I think also Canada lacks enough refineries, and a lot of Canadian crude is refined in the US. Yeah, euro yen, a false breakout. Let's take a look. Well, the line I'm looking at is 125, so we don't have a breakout. We have it capped. Maybe you mean a breakout out above 124 or 124.40. I don't think it's false at the moment. I think this move makes sense. I mean, but I don't know if you're referring to another line. Let me know. Okay, let's continue with today's events. We have now, at this moment, flash purchasing managers indices in the Eurozone. Maybe that's the reason for this most recent slide, okay? So it's now here in Barcelona, it's almost 9:30. We soon have the German figures. The French figures were mixed. We had them just a few minutes ago. Sorry, at 9 here in Barcelona, 8 in the UK, 7 GMT when we began the show. So we have the manufacturing PMI, which was a big disappointment, 48.3 instead of 49.8, deeper into recession. Remember, the 50-point threshold is what separates growth from contraction. Okay. So it was a bitter disappointment. But on the services side, we had it beat expectations at 50.8 instead of 50.2. So according to this figure by Market, company Market, which produces these surveys, makes these surveys, the French services sector is back into growth, very weak growth, and the manufacturing sector is deeper into contraction. So it's well, I think it's more negative than positive on the balance, but in terms of expectations. But yeah, we'll have the German number very soon. Meanwhile, I have a question. Stochastics and RSI look like it. Okay. So if you look at those figures, the pattern not complete. Well, I just look at support and resistance on Euro Yen, and I just see a bounce from resistance at 125. Okay. Let's see if we have the German figure. Not yet. More important for Germany is manufacturing sector because. Okay. Okay. Where you sharing here your chart? Let me share it with everybody else. It's not loading yet. Okay, I'll share it as soon as it loads here. Anyway, okay, we have a beat in Germany. Manufacturing PMI came out at 51.9, so that's stronger than expected growth. Instead of 51, it's almost 52. Services PMI did miss. Nothing can be perfect. A slide from 55.1 to 54.6, but I think it's good news. Let's see if we have any kind of reaction on euro dollar in the last 30 minutes. No, it even extends its falls on this data. Also last time, unfortunately, these are supposed to be important releases. The Purchasing Managers Index, which is a forward-looking survey, and it's for the month of April. It's fresh, it's the preliminary, it's the earliest possible thing, and hardly any reaction, even when it comes from the biggest country. Okay. Okay, I have the screenshot here. All right. It's a bit too big. Okay. So what you're pointing at is this rake right here. In the RSIs. Yeah, I see what you're talking about. Right. Thanks for sharing. I don't have a clear bias on euro yen. I think it's more sideways. And another chart here that you're sharing for the Braveheart Aussie at key juncture, bounce or break. Haha, that's a good question. It's from Luca. I don't know. Again, I think RBA will try to talk down the Australian dollar. It doesn't like the current levels, doesn't match commodity prices. So that's my fundamental bias is to the downside. And it feels a bit, having trouble rising at these levels. So this trend line, yeah, I see a better chance of the pair falling below the trend line. Okay. Germany is reversed to France. Yeah, German economy is doing better than the French one. We know that. And Germany has a trade surplus. France has a deficit. Unemployment rate is much higher in France. And in France, services play a more important role. In Germany, there's a strong manufacturing sector, despite all the scandals in Volkswagen. Okay, the gold and the oil want to see a stronger dollar. We have seen, well, depends stronger dollar against which currency. So there is a correlation between a stronger dollar against the yen, for example. Okay, so when we have higher oil prices, we have a weaker Japanese yen, usually, okay? Well, sometimes we're seeing that also against the euro, and the euro is the vast majority of the dollar index. So when we have stronger, stronger dollar index, stronger oil in recent weeks. Regarding gold, it's a bit more mixed. Gold has been a bit more perplexing, I would say. Gold, in theory, likes more central bank action, more printing of money. It means if the Fed goes more dovish, it's good for gold, and it's bad for the dollar. So, but the Fed has been on the other path and quite static at the moment. So it's other central banks which are printing money, mostly, of course, the ECB and the Bank of Japan. Sinatra says my business is running fine. I'm in the services sector. Okay. So if they would ask you, you would say you would add some points to the services sector PMI. Yeah, the German economy is doing quite well. What service do you offer? And that can buy mainly transport of people in the VIP sector. Yeah, okay. So also tour guide, personal assistance. Oh, okay. Yeah, been to Germany last time 2 years ago. Was very, very efficient and nice. I mean, going around there as a tourist. First of all, I don't speak German, so it was easy getting all around in English, and people were nice, and tourist attractions were easy to reach, and have much more offer than I can fulfill. Okay, good for you. So you won't have to wait to become VIP for limousine. Yeah, okay. I'll remember that. Last time I've been to Minden, Hanover, and Hamburg. So I don't know where I'll go next, but maybe Berlin. Anyway, going back to currencies, we have euro dollar continuing the slide. It's sliding alongside other currencies against the dollar. This includes Japanese yen, the pound, and commodity currencies. Yeah, okay. Let's see if we didn't talk about events for today. Well, we talked about the Eurozone PMIs. The main event for me for today, I know that not for a lot of you guys, is Canadian figures. We have Canadian CPI and retail sales published at the same time. As always with double features, we need all of them to go in the same direction. In the past, we learned that retail sales had a bigger impact than inflation figures in Canada because it's always this double feature. So let's look at expectations just a bit. Yeah, inflation is expected, core inflation, to slow down to a pace of 1.7 instead of 1.9 year over year, and headline inflation to also drop from 1.4 to 1.2. It could be also an effect of the stronger Canadian dollar, which means that imported goods are cheaper. Okay. And it also weighs on the economy. The economy did enjoy the weaker Canadian dollar. Retail sales are expected month over month to rise. To drop by 0.8% after a big jump of 2.1% last time, and excluding cars, a drop of 0.5%. These are figures for February in retail sales, and for inflation, it's for March. Yesterday, we had retail sales in the UK for March, and part of the drop was blamed, of course, on the Easter holiday that came out at the end of March. I don't know if it's real or not. We'll be smarter, of course, next time, as we always are. Okay, and the last event for today is the coming from market, not from ISM. Market is important in the Eurozone, in the UK, but not so much in the US. Anyway, but it's still a flash figure. It's a very early release for April. Manufacturing PMI in US expectations stand on a small rise from 51.5 to 52. Maybe it could have a bit more of an impact because it's the sort of the last significant event for the day. Baker Hughes is interesting to know the number of oil rigs in the US, but number of rigs is much less important than the actual production. Okay. Okay, another something else here from Sinatra. Another chart. So once again, thanks for sharing. So these are the moves in the S&P, right? Heavy under in 30 minutes, 200 moving average. Yeah, also, no, SPX, that's the DXY, no? Dollar index. I think it's looking for a direction in general, a bit sideways at the moment. Perhaps we'll have a clearer direction next week after the Fed. Okay, it's an interesting chart. Once again, thank you very much for sharing. Okay, dollar strength, and you also talk about the S&P separately. Anyway, dollar strength. Yeah, at the moment we're seeing this dollar strength moving, and we might run into this uptrend resistance line, and then we have another one here. We just broke above this downtrend resistance. Okay. So thank you for that. Okay, let's get to the wrap up for today, and then we'll do, as always, the preview for next week's events. All right, so this is the wrap up for the live market open for Friday, April 22nd. Draghi provided some drama. Euro went up, then went back down. Now it's even extending its falls, but basically it's in the same range. And we had Draghi saying that basically we're waiting for the moves steps we announced to materialize, or ready to do more as always. No discussion about helicopter money that sent the euro up, but afterwards we had it this kind of meaner version. There was when it fell before the event, it was an opportunity to buy, and then when it went up, it was an opportunity to sell. Basically, we're in the same ranges. 112.50 works as support. Let's show the chart, followed by 112.20, and then 111.50. We're extending the falls now. I'm looking for 112.50 as the first support. On the upside, we have 113.35, and then 114.10 and 114.60, which is a very, very strong line. Big drama this morning. Report that the Bank of Japan is considering paying banks for lending money. So or in nicer words, applying negative rates to bank loans, a bit similar to the TLTROs of the ECB. It's not an announcement, but it's a report. It's not a rumor, so it has significant market impact. This means significantly more stimulus, and we're seeing the yen reacting. The yen is falling. Japanese stocks are rising. 110.66 is the current level. 111 is resistance, followed by 112 and 112.80. Support 110, 109, and most importantly, 107.65. So I would say that the Bank of Japan is a bit stealing the show from the ECB yesterday. Oil is a bit lower. The big fall came yesterday, and now it's stabilizing. OPEC is still talking about doing something or not. I'm very skeptical, especially as prices are not that low, and these countries don't really trust each other. That's another theme in markets. Okay, now it's 43.50. On the day, it's quite stable, but falling in the past half an hour. Okay, let's continue. The pound. Yesterday, we had terrible news from the UK regarding retail sales. That didn't stop the pound. It only caused it a temporary slide. Went all the way up to 144.35 over there, and we're back down. Support 142.80, 142.30, 20, 141.75. Anyway, the pound has shown a lot of resilience against weak data, against Brexit fears. Perhaps we have less Brexit fears than we had. Obama is also joining the Remain campaign in his visit to the UK. Okay, dollar CAD with the fall in oil, currently challenging the 127.50 resistance line. This worked as support. Okay, so it's basically at crossroads here. Dollar CAD at a key level. Later today, we have inflation and retail sales in Canada released at the same time. Expectations are low for both figures to be poor, but maybe if we'll have an upside surprise, it could help the Canadian dollar. 128.30, 129.30, and 130 are lines of resistance. 126.30 is support. Aussie dollar off the highs yesterday, pushed just a bit higher, but never went anywhere fast. 78.40 resistance. Now it's extending its falls below 77.40. Next line of support is 76.40, and the Kiwi dollar reaching also crossroads support 68.80, further support 68.20, 69.50, and 70.50 are lines of resistance. Okay, so today's event, we had so far PMIs from the Eurozone. They were a bit mixed, but the German manufacturing one, which is the most important one, came out better than expected. No impact whatsoever. Canadian figures at 12:30, and the market flash manufacturing PMI. So yeah, and yesterday we had something to watch out for. US jobless claims fell once more to record lows, 247,000. Okay, other US figures at the Philly Fed yesterday and beforehand other ones were not good at all. Building permits earlier this week. Okay. So this is the close. This is the wrap up. Now we'll do the preview for next week's events, and then I'll answer last questions. Okay. So this is the preview for the week of April 25th to April 29th. I'll just mention that I will not be here next week. I'll be traveling. I will try to join the FOMC coverage on Wednesday. Yeah, I will not be totally detached from markets, but I will be traveling and I will not be able to do the morning show. Anyway, on Monday, we have some figures at the German IFO Business Climate. That's Germany's #1 think tank. We had a better than expected figure from ZOO. Let's see if IFO, which has more weight, follows suit. US new home sales, more important than existing home sales that came out this week as expected. New home sales mean more economic activity. Durable goods orders on Tuesday. This reflects investment. The Fed is worried about soft investment. We learned that last time. Now we have it just before the Fed decision. And also consumer confidence from the conference board. Wednesday is undoubtedly the big day, beginning early with the Australian CPI released inflation figures in Australia are released only once per quarter, and this determines the policy of the RBA. So it'll be interesting to watch that if you're trading the Aussie. First release of UK GDP. Expectations are for a weaker growth. It can be blamed, rightfully or not, on the talk of a Brexit. And of course, the Fed decision in the evening of Wednesday. I expect them, because Yellen has been dovish, to bury the chances to cement a no hike in June. No hike in June, which is a decision when they have a meeting, when they have a press conference, I think implies only a rate hike in December, because September is just too close to the elections. So that's, of course, the big event. We heard from doves like Evans and Rosengren that they support more rate hikes, and that the markets are wrong on this. But if we listen to the most important people, of course, Chair Janet Yellen, we don't expect them to hint about any rate hike, and data hasn't been that positive. I mean, we could have negative growth, okay? I think if we do have hints about rate hike in June, it'll be relatively explicit. It'll be towards the next meeting, like we had in October, going into December. That will be a huge positive for the US dollar, okay? But that will be a huge surprise, okay? That will imply for me as well that GDP figures released the next day on Thursday will be better than expected, okay? So, but I would expect a more cautious, worried tone from the Fed, and perhaps if it's really, really worried, we can expect even negative growth in Q1, danger of recession, of course. On Wednesday, we also have the rate decision in New Zealand. With the recent strength of the Kiwi, they might have the itch to cut. They surprised with the rate cut beforehand. This time, they want to avoid leaks. They're not telling anybody from the press before the release. If you're trading the Kiwi, of course, that's a big, big event. Thursday, we have the Bank of Japan's rate decision, which became much more interesting as of this morning. That's because the Bank of Japan is now expected to announce more stimulus, perhaps applying negative rates to bank lending, or if you want to put it simply, paying banks, and that would serve as stimulus and can further weaken the yen if this is confirmed, but nothing is certain. There will be lots of speculation next week. And as I mentioned a few times already, the US GDP is the first release, quite a wild card. The first release for 2016 for Q1. It'll be a big event on Thursday. So we have Wednesday and Thursday really, really busy. On Friday, we have Eurozone inflation figures, but we're not really close to the next ECB meeting, only in June, so it's not that huge. And GDP data from a few countries. I haven't seen Germany on the calendar, but France, Spain are releasing their figures. Maybe I should look up the calendar once again, but anyway, it's still a busy morning, Friday morning for the euro. Also, end of month flows, because it'll be April 29th, and the next trading day will be only May 2nd. Okay, in some countries there will be a holiday on May 2nd. Anyway, so Eurozone inflation figures and some GDP data, and Canadian GDP as well for those trading the Canadian dollar. A busier week, I think, than this week. Well, we had Draghi this week, so we can't complain. Anyway, before we head off, see here a few questions. Dollar strength. Oh, we already looked at that. No, didn't we? Yeah, keep talking. OPEC oil denying the fibs. Yeah. So here's another nice chart, courtesy of Sinatra. Yeah, boom. Yeah, denying anything. Oil has been a bit crazy recently. Okay, so yeah, looking for a new direction, I would say. Thanks, Jax, for the kind words. And Luca as well. I'll try to have the best time, of course. Dollar index at a wedge line. We bounce from here. Intraday. Oh, that's a nice line. Yeah, we were referring to this line yesterday. Dale mentioned it. What Dale said is that he doesn't like this line because too many people are talking about it. Well, in a bit of different words, but I still think it's worth watching. But remember, there's so many other things moving the pound. All those opinion polls, declarations, everything Brexit related. I think it's a bit tougher. Well, there are worse pairs than the pound, but it's becoming a bit more choppy of late. Okay, anyway, that's a huge trend line. Will it bounce? I'm still bearish on the pound, so my tendency is that the line will hold, but let's see. Okay, thanks for that, Luca. And another chart from Sinatra. Oh, that was the dollar index? What I was... Sorry. Oh, this is the dollar index. Okay. Just a second. Just to... Oh, yeah. Sorry. Okay. Anyway, it's a big trend line. But yeah, it's the dollar index. Dollar... Well, I think I'm a bit more sideways than that. What I said before applies. If we get a dovish Federal Reserve next week, which is my baseline scenario, then we can have this line holding, or perhaps a false break and then another fall. So I'm bearish also, or not really bullish on the US dollar. Okay, sorry for that confusion. Anyway, last thing. No. This chart for Euro dollar from Sinatra. Yeah, you can see some kind of breakdown under this line, but until we see a really big move to the downside under 111.50, I don't think we have anything confirmed at the moment. I did read commentary by, I think it was Deutsche Bank, if I'm not mistaken, that they see euro dollar still going to parity. It's a bit far out. Sandra says, in my chart, the trend line gets lower and is already broken. How do you interpret the divergence on your... Good spotting, the voice, Holy Trinity setup in euro dollar. Well, maybe quite a few technical patterns, interesting technical patterns going over there. When I look at euro dollar, I see frustrating range trading with a few, once in a while we have some action. Anyway, I don't believe Deutsche Bank have an interest in their own. Yeah. When each time you read these bank analysis, remember that they have that they're not independent analysts. They are talking their books. You know that many times from Goldman Sachs or from Bill Gross. Anyway, okay, I think we've extended our stay in the show, but I'm always glad to do that if there are so many great questions. So thank you very much, everybody, for coming. You'll have the full show, the wrap-up, and the preview available on FX Street and later on Forex Crunch. Wish everybody a great day today in markets, a great weekend, of course. As I said, I will not be here next week. Perhaps I'll pop up for the Fed meeting, and they will follow markets. I'll be hugely surprised if the Fed goes more hawkish and the dollar surges, but you never know. I think the Bank of Japan also next week can steal the show. I'll be Guanyarem, yeah, it's a win in Catalan. Anyway, thank you, Yohay. Good journey next week. Yeah, I'll be traveling. I'll be back in the following week on May 2nd. As I said, I'll be traveling in the west of Spain, around Valladolid, Leon, and then Merida, Extremadura, and flying out from place near Seville. So it's off the beaten track a bit. Should be fun. But yeah, I'm here in the country where I live, so I'll be all the time connected to the internet. So I'll follow markets and probably pop up on the FOMC coverage with Valeria and Dale. Always fun broadcasting with them. Yeah. Anyway, have a great day, a great weekend, great week next week, and see you when I'm back. Okay. So that's it for today. Thank you and bye-bye.